What's going on, YouTube? Welcome back to Fleetwood Trades Crypto. Tonight's video is about GAIMIN, Gmrx. I'm making this video for two different reasons. One is because you guys probably already know, if you follow my channel, that I am a holder. I am investing in GAIMIN. I think that the project is going to be very strong. And number two, because I am a trader, I see a great trading opportunity for an individual move here that may not be like a swing throughout the entirety of the whole market, but a short-term swing opportunity. So with that being said, we're going to hop in. If you like this video, please hit the like button, subscribe to the channel, all that good stuff. Follow me here at Fleetwood Trades on X, and you can take a look at GAIMIN on X. Follow them there if you're interested. GAIMIN.io. You can see the link tree, look at their website. They've got a lot going on. It's more than I'm willing to talk about right now because I want the majority of this video to be on the charts. Take a look at them on CoinMarketCap really quickly. Take a look and see the current price. The current market cap is 16.27 million with a fully diluted value at 74 million. 100 billion token total supply with 21 billion and 21.75 billion in current circulating supply. The market depths aren't bad at all for how low of a market cap this token is. Sorry, my dog decided that she was going to lick herself very loudly. But anyway, the market depths, the -2% and +2%, it's solid for a market cap this high, or this low rather. 2600, 2616. I don't know why MEXC is always a low depth, but then even weeks is at 2795. So the 2% depth is pretty good. I'm going to take a look at the chart, because the chart's what's most important right now, and as far as the crux of this video. So you can see, first and foremost, the biggest point of this chart is that the downtrend has absolutely been broken. There's been an absolute break of the downtrend with power, with a displacement move. That is huge. It's important. I'm going to go ahead and take this line off the chart because there's really no need for it anymore. It is clear that this trend has broken. Now, what I look for at this point, right? So we've had highs and lows, lower highs, lower lows, lower highs, lower lows, and we go from our most recent lower low. I'm gonna just make a Fibonacci off of this Fibonacci retrace, and you'll start to see there's a little bit of a pattern growing here. We had a retrace back just beyond the 0.62, or the 0.618 is the standard. What it comes standard on TradingView is the 0.618. I move it to 0.62, but that's just a preference for me. And then on the 4-hour time frame, this area here was a fair value gap. Price rolled up very, very quickly. There wasn't sell offers in this area, so you can see that prices were going up, 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 up. While there was a slight wick down, it just pushed right back up. There wasn't a sell offer in this whole area. Price came down, offered some selling in this area, and now it's starting to push back up. That is typically what the markets need. Market makers need to balance markets. Typically, markets want to be efficient. Markets want to have balance and efficiency, so they get pushed towards liquidity, right? So they hit a low. There's a low point on any market. As long as the token is not dying, or the stock is not dying, or the currency is not dying, then there's going to hit a point where there's a low enough price where liquidity is going to come rushing in, because even the biggest whales or the biggest cheapskates are going to say that's a really good price to buy, and I'm going to start buying, and that starts pushing market up, right? So you have, this is external liquidity, this is external liquidity. So you've reached an area of external liquidity. I don't know why this area was, but we'll find out. You know, it's somewhere there. There was definitely a range being built here, so that might be why it stopped there. You can try to figure that out, but it's not really necessary. This fair value gap created internal liquidity. Price stopped, took out the internal liquidity here, and should rise to go after this external liquidity again. Price moves from one pocket of liquidity to another. That's what markets do. That's what prices do. That's what market makers do. Prices move from one pocket of liquidity to the next. That's why there's a lot of consolidation in an area, building liquidity, building liquidity, building liquidity, and then it moves up really fast, and then it stair steps back down, and it moves up really fast and stair steps back down. In a bull market, in a bear market, it's the opposite. In a bear market, it jumps down really fast, consolidates sideways, kind of goes up a little bit slowly and then jumps down again. So in that bull market, it's a stairs down, escalator up, or elevator up rather. So I think that this is an opportunity for a massive long position, and I would likely put a position here. Now this is not something I would put on leverage. I don't even know if there is trading for leverage for GAIMIN, but this is not something I would leverage because of the amount of risk involved, even with having a stop loss here at the bottom of the fair value gap candle. Actually, it would be this bottom. I said 30% stop loss. Honestly, for a swing like this, I'm going no leverage and I'm just swing trading. I'm holding a position to see if I can make it to the 1.618 Fibonacci extension. So you go from your peak down to your trough and you look at your 1.618. That puts the price here at 0.002027. Now at this area, you're looking at another 178% gain from if you got in at the top of this fair value gap. If you got in at the current price level, it's still 170%. And this is very feasible. Just next step up. You typically have these extensions, and the extensions, it could go to the 2.618 or the 3.618. They're all feasible, but the 1.618 extension typically is a safe bet to get hit. It's a safe area to take profits, and it's a 5-to-1 risk to reward ratio, which is phenomenal. So with that being said, guys, that's a trading strategy that I use all the time. A change of character in the market. You get the first pullback on that change of character, and then you ride the price up after that first pullback. With that being said, guys, that's the video. I hope you enjoyed. Sorry about the little interruption with the pup, but yeah, guys, that's all I got for tonight. As always, until next time, peace.